For the introduction, Mr.Diy is a Malaysia-based home improvement retailer. Mr.Diy Group provides home improvement products for do-it-self projects through online and offline store. Mr.Diy Group owns and operates over 1,000 stores in Malaysia. The mission and vision Mr.Diy. For the mission, Mr.Diy wants to be the largest home improvement retailer in Asia. For the mission, DIY want to create a globally recognized retail brand to offer a diverse retail experience catering to different customer segments, to maintain a wide variety of good quality, value for the item, thereby holding true to our motto is always low price.
For the definitions of current ratio, which is a financial ratio called the current ratio, assess how well a business can use its short-term assets to pay off its short-term liability. It is a liquidity ratio that sheds light on a company's capacity to pay its debt in the near future and its short-term financial health. For the formula current ratio, which is current asset dividing to current liability. For the calculation for current ratio, which is for the year 2020, the current ratio it is Rm 908,686 ringgit dividing to 523,598 ringgit is equal to 1.74 times. The current ratio for Mr.Diy is 1.74 times, which is larger than 1. It is mean for the year of 2020, the means of Mr.Diy company is getting better for the current asset than the current liability that completely full all the requirements. Next, for the 2021 current ratio, which is Rm 1,084,269 ringgit dividing to 538,379 ringgit is equal to 2.01 times. The current ratio for Mr.Diy is 2.01 times, which is larger than 1. It's mean for the year of 2021, that's mean the Mr.Diy company is getting better for the current asset than the current liability that completely fulfill all the requirements. Last, for the year of 2022, the current ratio is Rm 1,375,924 dividing to 720,656 ringgit is equal to 1.91 times. The current ratio for Mr.Diy is 1.91 times, which is larger than 1. It's mean for the year of 2022, the means of the Mr.Diy company is getting better for the current asset than the current liability that completely fulfill all the requirements. That's mean the 2020, 2021, and also 2022, the current asset is better than the current liability for the company Mr.Diy Berhad. For the quick ratio are useful for evaluating the viability of commercial organization, but they don't provide a comprehensive view of the state of the company. The quick ratio may appear healthy when the company is really on the verge of going bankrupt. It is have significant quantity of account receivable that are due for payment after a long time and account payable that needs to be paid immediately. On the other hand, a firm may have a very low quick ratio and still be in excellent health if it has secure lead term for supplier and speedy payment or cash for consumer. For the formula of quick ratio, which is current asset minus to inventory dividing to current liability. For the calculation for the quick ratio for 2020 for company Mr.Diy Berhad, which is 9,800,686 ringgit minus to 690,047 ringgit dividing to 523,598 ringgit equal to 0.42 times. In a year of 2020, every 1 ringgit for current liability, Mr.Diy has 0.2 quick asset as backup. It means Mr.Diy has the ability to pay back the short-term debt in short times. For the 2021 quick ratio, which is 1,084,269 ringgit minus to 748,938 ringgit dividing to 538,379 ringgit is also equal to 0.62 times. In the year of 2021, in every one of current liability, Mr.Diy has 0.62 quick asset as backup. It means for this year, Mr.Diy has the ability to pay back for a short-term debt in a short-term time. Last but not least, for the year of 2022, quick ratio, which is 1,375,924 ringgit minus to 1,099,725 ringgit dividing to 720,656 ringgit is equal to 0.38 times. In the year of 2022, every one for current liability, Mr.Diy has 0.38 quick asset as backup. It means Mr.Diy has the ability to pay back the short-term debts in the short times.
This ratio measures the extent of efficiency of firm in using their resources to generate sales. One of the functions is to measure the effectiveness or efficiency of a firm to manage its investment in inventory. For the formula, the first one is inventory turnover ratio, ITO. Formula ITO is sales divide inventory. Number 2 is average collection period ratio. Formula ACP is account receivable divide sales multiple 360. For number 3 is fixed assets turnover ratio. FATO. Formula FATO is sales divide total assets. the inventory turnover ratio for year 2020, 2021, and 2022. For 2022, we use formula ITO equal to sales divide inventory. So 2559 315 divide 690047 equal to 3.70 times. The inventory turnover for Mr.Diy is 3.0 times. It is satisfactory. For 2021, 3370408 divide 7,48938 equal to 4.50 times. The inventory turnover ratio for Mr.Diy is 4.50 times. It is satisfactory. For 2020, 3.985 5842. For 2021, 3985 842 divide 1099725 equal to 3.62 times. The inventory turnover ratio for Mr.Diy is 3.62 times. It is satisfactory.
For the average collection period for the year of 2020, 2021, and 2022 for the company of Mr.Diy Berhad, for the year of 2020, the amounts that I got, which is 70 days. Mr.Diy is on average collected credit sales every 17 days. This is better than the industry average as a whole. For the 2021, all he got is 14 days. Mr.Diy is average collected credit sales every 14 days. This is better than the industry average as a whole. And for the last one, which is for the year of 2022, all the equal we got is 10 days. And for the conclusion that we got is Mr.Diy is on average collected credit sales every 10 days. This is better than the industry average as a whole.
For the fixed asset turnover for year 2022, 2021, and 2020, the formulation is formula of FATO equal to sales divide total assets. So for year 2020, 2559315 divide 2252979 equal to 1.14 times. The investment in fixed assets is 1.14 times, which is satisfactory. For 2021, 3373408 divide 2700599 equal to 1.25 times. The investment in fixed asset is 1.25 times, which is satisfactory. For 2022, 3985842 divide 3323598 equal to 1.20 times. The investments in fixed asset is 1.20 times, which is satisfactory.
For my part, I will explain about the leverage ratio. Leverage ratio is financial measurement called leverage ratio can be used to determine how much debt a company has in relation to equity or other financial parameters. When evaluating a company's risk profile, financial stability, and ability to pay its debts, these ratios are essential. Leverage ratio have a three sub. First is debt ratio. That formula, total debt divide total asset times 100. And second, debt to equity ratio. That formula is total debt divide total equity times 100. And last, a ratio, time interest earned. That formula, EBIT divide interest times 100. Next, I will explain my conclusion about the leverage ratio. I will get for the debt ratio for Mr.Diy from 2020, 2021, and last 2022 is 1.738%, 2.645%, and last 0.210%. For net equity ratio, it indicates that Mr.Diy can make a net profit and lastly is a type interest earned. The type for Mr.Diy is higher than the industry average of 3.014 times for every of total interest, which is satisfactory.
Gross profit margin measures the ability of firm to control the variable cost component or cost of goods sold in the firm. Higher ratio is desirable as it indicates lower cost of goods sold relative to sales. Gross profit margin in year 2022 is higher than year 2021. Based on the above table shows that every ringgit net sales Mr.Diy earned a gross profit of 41.33 cents for year 2022, while every ringgit net sales in year 2021 Mr.Diy earned a gross profit of 41.25 cents. Gross profit margin in year 2021 is lower than year 2022. Based on the above table shows that every ringgit net sale Mr.Diy earned a gross profit of 41.25 cents for year 2022. While every ringgit net sale in year 2020, Mr.Diy earned a gross profit of 42.65 cents. Operating profit margin measures of the operating profit, which is earning before interest and taxes relative to sales. It relates to the firm's ability to control all costs except interest and taxes its operation. Higher ratio is preferred as it indicates a lower cost structure and will result in higher profits. Operating profit margin for year 2022 is higher than year 2021. For every ringgit net sales, Mr.Diy earned an operating profit of 16.09 cents for year 2022, while every ringgit in net sales in year 2021, Mr.Diy earned an operating profit of 15.71 cents. Operating profit margin in year 2021 is lower than year 2022. For every ringgit net sales, Mr. DIY earned an operating profit of 15.71 cents for year 2021, while every ringgit net sales in year 2022, Mr. DIY earned an operating profit of 20.50 cents. Net profit margin measures the after-tax profit per ringgit of sales. It is the ability of the firm to generate the net income from its sales after deducting all expenses, including interest and taxes. Higher ratio is better as it indicates higher ability of the firm to obtain profits for distribution to the equity holders and internal source of financing to support normal growth. Net profit margin for year 2022 is lower than year 2021. For every ringgit net sales, Mr. DIY earned a net profit of 11.89 cents for year 2022, while every ringgit net sales in year 2021, Mr. DIY earned a net profit of 12.81 cents. Net profit margin in year 2021 is lower than year 2020. For every ringgit net sales, Mr. DIY earned a net profit of 12.81 cents for year 2021, while every ringgit net sales in year 2020, Mr. DIY earned a net profit of 13.17 cents. Of equity measures the common Return of equity measures the common shareholders' rate of return on their investment in the company, that is by looking at profitability of the firm relative to company equity. Higher ratio is desirable as it indicates higher annual payoff to investors. Return on equity for year 2022 is lower than year 2021. For every equity that Mr. DIY owned, Mr. DIY get 33.07% return on equity for year 2022, while for the year 2021, Mr. DIY get 37.59% return on equity. Return of equity for year 2021 is lower than year 2020. For every equity that Mr. DIY owned, Mr. DIY get 37.59% return on equity for year 2021, while for the year 2020, Mr. DIY get 38.46% return on equity. Return on asset, also known as return in investment, and measure the firm's ability to generate net income relative to total assets employed in its operation. In essence, it shows the net result of the firm's investment decision on liquidity and the utilization of all assets to generate sales and hence profits. Higher ratio prefer as it will be able to maintain growth and attract outside capital. Return of asset for year 2022 is lower than year 2021. For every asset that Mr. DIY owned, Mr. DIY get 14.26% return on asset for year 2022, while for year 2021, Mr. DIY get 16% return on asset. Return of asset for year 2021 is higher than year 2020. For every asset that Mr. DIY owned, Mr. DIY get 16% return on asset for year 2021, while for year 2020, Mr. DIY get 14.96% return on asset.
For explanation about the vertical, in the financial structure, the company relies heavily on long-term debt equity financial accounting for 297.75% of total equity over the 3 years. We can see that Mr. DIY have a huge amount of asset that can make their business go smoothly. Mr. DIY has made substantial investment in intangible, it's 0% percentage of total asset. And property, plant and equipment, 53.69% of total asset. From that show that Mr. DIY really careful when investing the profit for the company to grow better. Mr. DIY have some decrease in the vertical cumulative force of equity have significantly declined by 20.10% in 2021, showcasing the success of the company effort to control anxious margin and control costs. The proportion of receivable to current asset decreased from a peak of 17.2% to 35.43% in 2022, indicating potential improvement in operating capital oversight, possibly due to better collection of all stricter credit standard. Mr. DIY have their way in managing the percentage of current liability overs to suppliers decrease over the 3 years, suggesting and Mr. DIY was able to settle its near-term payable more quickly. This points towards improved liquidity, equity, financial and borrowing. The statement financial position vertical indicates an overall improvement in profitability for Mr. DIY, but the precise regarding the stability of its balance sheet, particularly in terms of sustained demand of our equipment. In summary, Mr. DIY financial position seems to be on an upward trajectory marked by improved profitability and liquidity. However, challenge related to the stability of the balance sheet and sustained demand for equipment need to be addressed for more comprehensive assessment of.
Okay, now we are going to talk about the horizontal analysis SOFP Mr. DIY. Okay, Mr. DIY financial statement for the year 2020 to 2022 reflects strategic shift aimed at enhancing working capital management and liquidity while reducing investment in fixed and intangible assets. Notably, favorable change in deferred tax assets and on non-current assets indicate the business capacity to repay larger loans in the subsequent year. Despite a discrete decrease in trade and other receivable, suggesting a manageable debt-to-income ratio, a significant decline in bank deposits and cash holding in 2022 signal potential challenge for the company in 2021. The equity positions remain strong, with a relatively low borrowing rate between -22.70% and -27.0% from 2020 to 2022. This is supported by declining deferred tax liabilities, indicating sufficient cash reserve to settle debt. Mr. Diy's ability to borrow has shown positive performance, with borrowing capability ranging from -20.87% to 55 to 74% in 2021 and 2022, respectively. The company demonstrated the capacity to borrow, enhancing overall performance. Furthermore, change in provision and restoration costs from 2020 to 2022 suggests that the company's ability to assess future costs based on the current conditions. Overall, Mr. Diy financial statement reflects a strategic approach to financial management, emphasizing liquidity and debt management and also future cost consideration.
So for recommendation after reviewing Mr.Diy Group Berhad, which is from 2020, 2021 and 2022 financial data, a few strategic recommendations have been made to improve the company financial position and cash health. Mr.Diy Group operational efficiency is demonstrated by its quick collection times and strong stock turnover. It's critical that the company continue to leverage this advantage. This could entail investing more funds in supply chain support system and inventory management software. This will guarantee that the engagement result in increased revenue. On the other hand, a slight decline in financial metrics such as a net profit ratio and gross profit margin indicate that we should carefully review our cost of sale. If the cost of sales still increase, it will affect the company's net profit. Additionally, the company will benefit more closely examine its pricing strategy. This is to ensure that they not only meet but it also surpass competitor in providing customer with that Mr.Diy Berhad offer. Apart from that, the slight increase in the debt-to-equity ratio in 2022 warrant close examination. Mr.Diy Berhad cash balance isn't an issue at the moment. To maintain the best possible position, however, they must consistently review the capital structure to ensure that debt and ownership share are properly balanced. This will protect the company value for shareholder and its help withstand financial difficulties. The company financial position is still favorable, indicating that its short-term financial performance is strong. However, Mr.Diy Berhad it also offers an opportunity to explore more efficient way to manage their finance. Investing in new concept, expanding the market, or producing a variety of goods can improve things and yield significant long-term gains. Ultimately, with solid financial foundations, Mr.Diy Group is prepared to consider bold venture like entering new market or acquiring complementary business. This could strengthen it in the industry and attract new funding source. In most cases, being marginally less profitable and maintain close eyes on its financial condition. It also critical that they are given fresh opportunity in order to maintain their position as the industry leader offering superior value to stockholder. These pointers are indeed to assist Mr.Diy Berhad in maintaining his leader position in the market and long-term success.
For the conclusion, based on how Mr.Diy used their money in doing business from 2020 to 2022, it shows that people can spend their money at the company because they can pay off all debts and can make enough profit to continue the business smoothly in the short term. The company also handles its inventory very effectively, giving them the opportunity to generate more profit each year. This can also show that these companies are able to handle their finances with a systematic system. Mr.Diy companies dares to take risks and do business without worrying about that.